Many of us have myths about saving and investing. A lot of people think that saving and investment can only be done by people who earn a lot. People with lesser budgets or lesser earnings don't have any options to invest. Hello viewers and welcome to Financial Friday Sessions by Renew All. Today I am going to tell you how can you invest in stocks with limited funds. Let's talk about 5 simple principles through which you can invest right and create a good wealth for yourself in longer run. To become an investor, the first thing that you do is create a habit of saving. If you are not able to save, then you will never be able to invest properly. As we have previously discussed, we need to at least invest 20% of our monthly income. You don't necessarily need to put aside a larger chunk of your monthly income. You can just do a little investment at a time. But the principle here is consistency. You just invest on the day when your salary gets credited in your bank account. Instead of putting your money as cash in your bank account, you should invest them in liquid funds. Liquid funds are those debt securities which invest in instruments like commercial papers, government securities, and treasury bills. By the name itself, they are highly liquid. That means they can be redeemed within 24 hours. Generally, they provide a higher rate of returns than savings account because they carry a risk of mutual fund. Usually, people invest in the stocks as soon as they get their salaries. But this is not the correct way. What you do is, you research about that stock for about a month and then you shortlist all the stocks that you want to invest in. And then you wait for the prices of the stocks to go down. And that is the point where you start investing. As you already know that the market is very volatile and you will keep getting the chances to invest at a lower price whenever the market goes down. And in this way, you will be able to mitigate your risk. People usually turn out to their family, friends, colleagues for investment advice. And at the end, they might end up taking wrong decisions. To avoid this, you need to have great understanding of sectors and shares. There are 4,000 plus companies in the stock market and you cannot definitely invest in all of them. What you do is you invest in familiar sector or familiar business or the companies whose performance you are sure of. And in this way, you will be able to invest for a longer period of time and also earn better return for yourselves. As an investor, you cannot study about all the sectors or all the companies. It's better to stick to one sector so that you can safely invest your money. Always focus on long-term investments. What people do is they invest their money and then start checking the prices regularly. If you have researched well and then invested your money, then let your money be there for a longer period of time. In this way, you will be able to build a portfolio instead of trading on a daily basis. You should focus to be an investor than a trader. What happens is people start exiting the market as soon as they earn 20% return on their investments. This is a slow process and needs time to understand it better. But once you understand it, then you are sure to get better returns on your investments. So that's all for today's Financial Friday sessions. I hope this video is useful for you to understand and make better investing decisions. If you liked our video, then do give it a thumbs up, subscribe to our channel and do not forget to share it with your friends and colleagues. If you want to know about something specific, then do mention in the comment section below. Till then, stay home and stay safe. Thank you.